What's up, everyone? In this video, we have some tough information to talk about. Basically, we're going to explain what is going on in the market right now, and more importantly, how to handle this wild, irrational market. So, the information we're going to cover today is going to be a little bit tough, but I think that overall this video is going to help a lot of people. So, stick with me today, guys. We have a good video, and we're just going to start off right by talking about what the heck is going on in the market. For the past couple of weeks, it has been extremely volatile. There have been a lot of ups and downs, mostly downs, and we've just been seeing almost every stock just get destroyed. Whether you're looking at some of the powerhouse big tech companies like Apple and Microsoft, or even if you're looking at some of the growth companies like DraftKings or Palantir or Zoom or AMD or Nvidia or Square or anything. Anything is just getting destroyed right now, and it's been a brutal market. And unfortunately, basically ever since the market was created, traders continue to make the same mistakes, and it's very unfortunate. So in this video, we're going to talk about what those mistakes are and how not to get screwed over in this market, or at least how to limit some of the losses. So we're going to start off by showing this little graphic. Like if you just do a quick little Google search for stock market emotional cycle, there are a bunch of different images like this, and it basically shows you how investor sentiment is relation to market cycles. So we could see, when everything was just booming last year, when I guess you'd say 2 years ago at this point, everyone was just super euphoric and all stocks are running up, and it was a giant party for a year and a half. Just every single stock just blasted to the upside. But now it's the exact opposite. It's like we're almost like in that anger phase, you can say, right here, right where my cursor is. Like every single stock just gets destroyed. Whether you're looking at some of the growth plays like DraftKings, or let's say you're looking at some of the more established plays like AMD and Nvidia, like they're getting destroyed. Apple's getting destroyed. Everything is getting destroyed. And basically, unfortunately, a lot of traders love to buy in when, times are great, stocks are blasting to the upside, but then when the dip comes along, even though it's not logical, a lot of people sell out. And there's a variety of reasons for this, but while the market is, in my opinion, extremely irrational right now, there is a lot of opportunity with this to set your future self up for a lot of success over the next couple of years. Does this mean that the stock market's going to turn around this week or this month or in 2 months? No. Anything can happen in the short term, and especially when we have these crazy events like Russia trying to invade Ukraine, there's so much volatility that honestly nobody can predict with certainty. So it's like, while the market's whack right now, there is a way to set your future self up for success, and that's what we're going to be talking about shortly. But going back to just looking at the market overall, one point I wanted to make is when it rains, it pours in the market. So if we zoom out a little bit, we can see that over the past 5 years, I guess you could say over the past 5 years, the market has just been blasting to the upside. Of course, the market had a giant drop with COVID in the beginning of 2020, but 2020 was a green year for the market. Like if we look at the SPY, the SPY started out around $320. It dropped all the way down to $218, and then it ended at almost $370. So even though 2020 was a hard year for the market in the beginning stages, it finished green. So it's we've basically been on an uptrend for a long, long time. And while we did have that dip in 2020, it wasn't that bad of a dip. And the point I'm trying to make is that bull run from, I guess you can say, March of 2020 all the way up to, I guess you can say the beginning of 2021, it's basically just been nonstop euphoria, right? But over the past year, we've been seeing a lot of profit taking with some of these stocks that honestly were just a little bit overvalued, like Zoom. So for example, in 2020, Zoom went from, I guess you can say, $70 all the way up to highs of $588. Clearly, it was a little bit overvalued, and now we're really, really starting to see it just sink down, and now it's at like 127. So the point I'm trying to make is when it rains, it pours, because a lot of these tech stocks, especially, and a lot of these growth stocks were overvalued to begin with, right? So they started selling off because of that. But then, when rates started to rise, it definitely hurt their present day valuations even more. And then on top of that, short sellers came in and, dragged the stock even lower. And then you have the people who've been, holding some of these stocks saying, all right, rising rates, the stock was overvalued to begin with, short sellers are coming in, now I'm just going to sell out. And that just continues to add more selling pressure. So it's like we're having like a giant combination that is just driving a lot of stocks down. I guess you can say the fact that they were a little bit overvalued to begin with, plus rising rates, plus short sellers coming in, plus people who've been owning some of these stocks selling out at, in my opinion, a bad time. It's just it makes like a giant disaster, not even just for Zoom, but for a lot of growth companies. So basically, while this sucks, there is an opportunity, and basically, if you have stocks that you've wanted to own, that let's say you look at Palantir. That's a pretty good example. So if we zoom out and we go to like a 4-year chart, we can see Palantir initially was trading for around $10 each, and it ran all the way up to $45 each. If you liked Palantir, for example, when it was at $40, then you'd love it at 11. And this is just a random example of Palantir. I'm not saying to buy Palantir, but just a random example. The point is that if you have companies that you would like to own, now's the time to buy if they're trading at a fair valuation. So it's like if you have a company that you believe will grow substantially over the next 5 to 10 years and it's trading at a good valuation right now, now's the time to buy. It doesn't mean it's the bottom by any means. Honestly, nobody knows which market, I guess you could say, at which point we are in the market cycle. For example, technically we can be in this fear stage, or we could be in this depression stage right here. No one truly knows that, but if you find a good deal, now's the time to buy. As Warren Buffett would say, be greedy when others are fearful, and fearful when others are greedy. And I'll tell you, there's a lot of fear right now in the markets. So it's like, if you see good deals, yeah, it might not be the bottom, but they're not going to last forever. And then another thing I wanted to bring up is, this is a little bit of an extreme example, but I want to demonstrate the point anyways. If we go back to the tech bubble in the 2000s, Amazon stock in 1997 was trading for $1.31. In 2000, in I guess you can say December, what is that? I guess actually it's December of 1999. Amazon stock was trading for $113 a share. Went from $1.30 to $113 a share in a couple years. But then guess what happened? It lost 95% of its value in just a couple years. From 1999 to 2001, Amazon stock went from $113 a share all the way down to $5.50. And then how about we zoom out? Now Amazon's trading for over $3,000 a share. So the point is that sometimes the market's irrational. Should Amazon have been at $113 in 1999? No, probably not. But should it have fell all the way down to $5.50? No, probably not. So the point is that sometimes the market can get very irrational. And, let's say when you're holding stocks and, we're in that euphoric phase, it's like awesome. Like I can sell these stocks for like a super high price, and that's awesome. But also the market gets very irrational to the downside too, where stocks get hammered down a lot lower than they should have. So it's like, kind of just use that Amazon example. Amazon was nowhere near the company it is today back in 1999. But the point is that, some of these stocks, even when they get hammered down significantly, that doesn't mean that they're just going to go bankrupt, right? Like there's potential there. And a very important thing to keep in mind is most stocks will not end up like Amazon. For example, if you just look around at every stock in the market right now that's down 95%, they're not gonna rebound like Amazon did. Amazon it's far and few between. But the point is that the market can be irrational sometimes, and while it hurts to see stocks that you love just getting absolutely destroyed day after day and week after week, at the end of the day, if you're buying into companies that are rapidly growing and that are trading at fair valuations, just let the market do its thing, and eventually it will return to, its fair valuation. For example, someone might have bought Amazon at $10 a share, right? $10 a share back in 2001, and then they might have watched it drop all the way down to $5.50 a share just a couple months later. And at the time, they were probably thinking, damn, I'm down 50% on my investment. But just a couple months later, the shares rebounded all the way back up to 60. So it's there's just a lot of things to keep in mind when we're in this type of market cycle. And here's another quote by Warren Buffett. The stock market is designed to transfer money from the active to the patient. So I think that's a very, very important quote, especially in today's time, because there's a lot of events, honestly, that just can't be predicted. No one knows what Putin's going to do with Ukraine. It's there's so many variables there where the point is you probably don't want to be speculating on what's going to happen to the market over the next 3 minutes when you have a lot of good deals out there right now. So one of the biggest mistakes I made when I first started investing is I did not start a long-term portfolio soon enough. So it's I know sometimes it can be boring, I want to trade every day and do this, and that. Starting a long-term portfolio is so important. Just even if it's just a small amount, consider making, even if you have to make a separate account that you just forget about, that you add, maybe a couple $100s a month to every month, and you just let it grow. It's such an important thing. Please start a long-term account, especially if you see stocks at good levels. So really consider making a long-term account. It was a mistake I made, and I'd rather you guys not make that mistake. But like I said, at the end of the day, if you have good companies that are trading at good valuations, now's the time to buy the dip, right? Does it mean it's the bottom? Absolutely not. The market can easily fall a lot more. If Russia invades Ukraine, that'd be terrible. So keep that in mind. And then one last closing thing. You guys hear me talk about this a lot, but our new stock analysis dashboard, in a time like we have now in the market, valuations are extremely, extremely important. And I know a lot of people only really look at technicals, but fundamentals are extremely important. So with our new dashboard, you can type in any stock you want. Let's say we did Microsoft, for example, and within seconds, you could see the most important data that is driving that company. And you can find out whether it's trading at a good valuation or not. We basically have a lot of different things working in the background that make this dashboard what it is, where basically you can type in any ticker and see the most important data, and we have so many updates in the works. It's insane. We are cheaper than our competitors, and it's a great tool. I use this literally every single day. So, if you're looking to buy the dip, the stock analysis dashboard would definitely be a giant help. Right now, it's a one-time payment. The link is in the description down below. Definitely check it out. The prices will be rising. But besides that, don't forget that the market will be closed tomorrow, Monday, February 21st, for President's Day. So don't forget about that. Market's closed tomorrow. Besides that, I hope you guys have a great holiday weekend. And thank you guys so much for watching. If you liked the video, please leave a comment down below. But other than that, thank you guys so much for watching.